Welcome back to another video. On today's session, we'll be going over how you can utilize 4-hour candles to get a daily bias. So I already did a video on deep dive of using 4-hour candles. I'll quickly just go over the intro and then cover a couple more items in the later slides, and then we'll dive into the live chart. All right. So going over to cover 4-hour candles. So in the 4-hour candles, usually throughout the whole day, you'll see 6 candle per days, and that kind of based on this, you can visualize give you on where the price is going to most likely trend towards on a daily basis, which is going to range. Okay. So first thing, what we look at mainly, I trade New York sessions, New York open sessions. So the 2 candle I really look at is the 2 a.m., 6 a.m., and also there is a 10 a.m. session candles before the 2 a.m. So these 3 candles over here. Let me mark this out. So I usually look at this candle, and then this second candle, and this third candle. And then sometimes if the form, there's no some sort of liquidity sweep or liquidity grab, typically I'll leverage the 4th candle to kind of give me an idea where likely it's going to trend towards. Okay, jumping into next one. So kind of what we're looking for, as mentioned before, is in the previous video, is we want to look for some sort of liquidity sweep or liquidity grab at the second candle that's coming up. So if you do a 3 candle patterns, the first candle, let's say, is this one, and then the second candle is this, there's a liquidity sweep from the 6 a.m. to the 2 a.m. So we can expect the 3rd candle to continue lower based on the second candle direction. Okay, so if it's vice versa, if it's going bullish, then we'll have the 1st candle being bearish, the 2nd candle will be a liquidity sweep going higher and a bullish candle, and the 3rd candle will continuation of the 2nd candle direction. Okay, so some of the 4-hour candle continuation logic here is hidden that you can backtest this as if you want, but I would say more than 80% of the candle will behave like this because it's just candle theory behaviors. And it makes sense, right? So if you look at 4-hour candles, and what you want to look for is sometimes you might get a sweep, but there's still continuation. There's no reversal of the pricing. And the reason is because the second candle didn't pass close beyond 50% of the previous 4-hour candle. That is not a strong switch of directions from the previous 4-hour candle. So if the first candle 4 hours is going bearish, the second candle is a bullish candle, but it didn't close above 50%, that means there's not enough buying pressures, more than sellers for that candle. So the 3rd candle coming up, there's less likelihood to continue bullish from the 2nd candle direction, and vice versa going to the bearish direction. So typically what I look at is within those candles, I want to look for at least 50% close above the 1st candle. Either it's a bearish candle or bullish candle, doesn't matter. It have to close above 50%. Then there is a strong shift of the momentum continuing the 2nd candle directions, right? In market in candle theory, if you can take a look at going back into, let's say, this one, right? If you mark from this high, from here to this low, the midpoint is around here, right? Let's say it's around here. This 2nd candle, you can obviously, the opens here. Once the 2nd candle close below the 50%, so this is the 50%, right? Once it go close below the 50%, you can tell there's a strong momentum shift going downward before it's going up. Now we have much stronger seller pressures going towards the sell side liquidity. Okay. So in the big candle, why this is tied into a candle theory is you can think of this in a big patterns, in the big picture, higher time frame. You can view as this liquidity sweep, and then there is a market structure shift, right? This is the 2nd candle. So let's say this is the 1st candle between 1 and 2. Okay, so the liquidity sweep happens at this high, so it will be at the 2nd candle high. And what happened here? Why do we want to close outside 50%? It means in the lower time frame, if you zoom in, there is some sort of market structure shift or changing state of delivery. It means there is a selling, originally buying pressures a lot of sellers step in, which switch the momentum from going buying into selling. So you can expect the third candle over here to continue lower by going up, but this will be your stop loss where it'll be set for it to continue lower, right? Okay, so based on this, you can kind of understand why we want to look for 50%. And a lot of I haven't seen a lot of video cover on this, why when we look for just the 4-hour candle sweep or the CRT, a lot of traders use CRT or liquidity sweep, whatever, they're not really looking just planning on if the second candle have the 50% mark. So even for the first run, in the bullish scenario, you can see this is second candle, right? This didn't close above 50%. That's a 50%. Yes, it continued, but there is a strong chance that this candle might just go up here a little bit and then continue lower. So it might go up and then swipe another liquidity going lower. We want to see candle close above it, then our entry will be around the fourth candle. So in this case, our entry will be in the fourth candle, not the third candle. It will be in the fourth candle, because this candle is where it show me there is a market structure shift from a lower time frame. While just looking at higher time frame, this essentially just means there's a market structure shift somewhere in lower time frame. If you zoom down to 1 hour, 30 minutes, you will see the market structure shift. Then you will look for entry, right? So jumping into our entry, how we can tie this in is, let's say 2 a.m. This is 30, going down to 30-minute chart from 4 hours and going to 5 minutes. So this is the 5-minute chart, sorry. So going to the 5-minute chart, you can see liquidity sweep is around here. So you have the 2 a.m. candle, 6 a.m. candle, 6 a.m. is swept. And afterwards, 6 a.m. there's a market structure shift afterwards, right? So if in the bigger time frame candle, what it will look like is you have a candle like this, you have a candle this, right? So this is swept. And then this is where the 10 a.m. candle come in, right? The liquidity index sweep, this is the protected high, right? These are protected high. It doesn't get outside, continue lower. And why? And typically this is the third candle. Why I won't be looking for an entry on the second candle? Because second candle close up here, right? Open up here, close up here. That means it didn't pass the 50% mark. I'm gonna look for the third candle where it passed the 50% mark, where you can see it go up, sweeped it, but went down, and market structure shift happened at the third candle. Market structure shift didn't happen at the second candle because it passed the 50% mark. And then you go up, rebalance, and this is where you look for the entry in the fair value gap for it to continue lower, right? It's as easy as that. So what we want to look for, again, this is very important to highlight, is mainly this. It must, when you look for 4-hour candle, it must go beyond the 50% mark. If you're bearish, you want the next candle to be opening bearish past the bullish candle more than 50%. Vice versa, if you want to be bullish, the bullish candle must close above 50% of the previous bearish 4-hour candle. All right, so now let's dive into the live chart. Okay, we'll just do a live chart of this. So we're currently looking at 4 hours, and then I'll just go over where I'm looking for. So you have the 2 a.m. over here, and you have the 6 a.m. So you can see there is no liquidity sweep at this candle. So there is one liquidity sweep at the 22. So this is around 10 p.m. And then there is a liquidity sweep at the 2 a.m. And I trade in New York time. So I'm marking this as a liquidity sweep, right? So marking it as an X, liquidity sweep. So that means in the lower time frame, then I will start looking for some sort of market structure shift. So if I go down to 1 hour, you can see the market structure shift happens over here, right? So there's the order block. Let me mark this. So there is a market structure shift over here. So you can see these bullish candle have body close outside of this consecutive down close candle. These are a market structure shift. Then my entry will be around here, right? So once retrace, my entry will be here, right? Then this will be a protected low, right? Then you can look for some sort of PD arrays. There is a fair value gap. You can enter here for long positions outside here, and then 2RR, right? Even without me looking at the lower time frame, I already know where the price is gonna go, right? So same thing, going back into here, there's no liquidity sweep, no liquidity sweep. Oh, here we got a liquidity sweep. Okay, now this is interesting, right? So we got a liquidity sweep here, but there's also another liquidity sweep at the 10 a.m. candle. So I'll mark this out and then going to down to showcase you why you should not be looking for a trade at the 6 a.m. So 6 going to 10 a.m. candle. So going down to 1 hour. This is a liquidity sweep at this candle, right? At the 9 a.m. candle, there is a liquidity sweep. You should not be looking long here at all. Why? There is no market structure shift, right? There is no market structure shift. And the reason why you say you shouldn't be looking for it, because the candle didn't even close below 50%, right? Didn't close below 50% of this candle, right? And why do we look for some sort of entry at this 10 a.m. candle instead? Because there is a market structure shift, right? This is a word block or market structure shift, how you want to view it. Change the state, we're in change the state of delivery. Market structure shift. Then you look for some sort of entry here. Then you can zoom into lower time frame. Your entry will be looking when the price come back into here. You look for a price here. It didn't rebalance to the word block, so on this day I didn't take any trade because this range of gap is way too big. There's no, it's not, the risk and reward is not good enough. Okay, jumping into, let me just go into here, disregard any of this. Okay, I will quickly just do this and then you'll see for all across all the next couple of days without diving into a lower time frame. Just looking at this. So there's no sweep, no sweep, no sweep, no sweep. There's no sweep. There's sweep here, right? No sweep here. I'll leave it as that. And then you can see there's no sweep, there's no sweep, but no closure above 50%. Here, we got a sweep. And then this candle closed above 50%, right? So we got a sweep here, and then going down into here. So we have sweep here, but no closure, no closure. Then we got another sweep here, another closure, right? But there's no closure, but there is a sweep down here where you can see there is a closure above 50%, right? So let's dive into the 1 hour. So I will mark this out. There is a sweep here later on, but there's no 50% and why you shouldn't take any trade here. Let me just mark that out. So going down to 1 hour, we got a sweep, same thing, market structure shift. Your entry will be at this candle, right? Simple as that. Once rebalance into some sort of lower time frame, I won't jump into a lower time frame. That'll be a separate video I already have done. If you want to see more in details for separate video, leave in the comments. I can do separate video on the whole top-down analysis. But you can, this will be essentially once there is a body closure, market structure shift confirmed, you will look for some sort of lower time frame PD array to enter or continue lower, right? Okay, so same thing. We have a market structure shift over here. Market structure shift, okay, and then you will look for some sort of rebalance at this candle over here, this candle over here. Okay, now this is the one I want to talk about. That's interesting. This is technically a range bound day, but even on range bound day, you can profit on this. Okay, the reason why, remember we said we do not. Let me go back into so I can show you again. I'll highlight it in different color. So this one I highlighted in red. Why we don't take this? You can see because once the liquidity sweep here, there is no 50% closure, right? If you do a 50% closure of this, 50% is down here. This candle do not close above it, below it, I mean. And then you can see why we choose to take this is because once it swept this candle, these candles, this candle closed at 50%. So this is a 50%. So I'll mark that out. This is the 50% mark, right? So this is a valid closure. That means there is some sort of market structure shift happening around this candle, right? Now let's jump into the 1 hour in 30 minutes. So in the 30 minutes, here we're looking at. So once the sweep is here, you can see there is a market structure shift happened at this candle, rebalance into here. So You can see these candles technically grab in the lower time frame. They grab another liquidity on here, so another liquidity sweep. But you will not have entered at this candle, right? You would not have entered at this candle because there is no change in state of delivery or market structure shift. What you will enter is at this candle, right? After this candle is formed. This is where this candle body closed outside of this down close candle, right? There is a market structure shift. Now, when you enter a trade, you'll be entered at the pullback, right? Even if you enter the pullback on here, this is your protected low, right? So your entry will be, let's say, around here, up here, even it's up here, a little bit high. Protect the low. It came close to it, but it didn't tap you out, and then you target this high. You have a 1.55 RR. This day you can clearly see it's a range bound day, so you won't have a good risk and reward ratio on this day, but it's still tradable. This day I wouldn't suggest trading it. And one thing I will point out is, how do you know when is a range bound day and when it's not a range bound day? Typically, when range bound day, you will get what you see here. You will have both sides liquidity sweep. You will see sweep the high over here. Technically, this all these equal highs, sorry, got swept as well. Then pull down, get swept, get up, get swept, and pull down. This holds, right? So when you have multiple sides getting sweep, you will have a range bound day. Versus compared to these days, right? So let me clear this out. All these days clear, one side sweep, one side sweep, one side sweep, one side sweep, and then market structure shift on lower time frame. Very easy. But on this day, well, how we can protect ourselves, even still want to trade it, I don't advise for beginner trader, is stay away from range bound. If you have multiple sweep on both high and low, it's gonna be a choppy day, right? Until both sides is sweep, until it dust settles, then you will see a structure. This structure didn't really form until pretty much into the next day. Well, near the PM session, outside trading hours, you didn't get a clear direction. So this is the last sweep and then the form a direction. But on this day, what you can still protect yourself is after sweep, you need to look for some sort of market structure shift, right? If there is no market structure shift, then you should not be looking for a trade. Okay. All right. So this pretty much cover this week. A couple example leveraging this week. Just using the 4 hour, looking at the 4 hour, we can pretty much give us a story on where the price is gonna go. And then to highlight again why we look for 50%. 50% closure. There's a market structure shift within a lower time frame that you can zoom down, and then you look for some sort of PD array for re-entry, right? Same thing here. Right, this 50%. I mean, this candle closed way outside 50%, right? Same thing over here. 50%. That means there is a continuation lower, right? You don't want to fight the trend, right? Same thing. Close outside 50%, rebalance, continuation, right? You can apply this into 4 hours. I typically use 4 hours for just intraday tradings. If you want to do swing tradings, I would suggest going to the daily and weekly. Time frame does matter. So if you're doing the 4 hours, this is 4 hours, and your entry will be the 30 minutes, right? Typically that's what I use. 4 hours, 30 minutes is my entry. And then if I go 1 hour, typically 4 hour give me direction. I'll use 1 hour to give me the market structure shift, and then we're 30 minutes as a market structure shift, and then my entry will use the 5. I'll use the 5 as my entry. Okay. You can also use 4 hour and 15 minutes, 4 hours and 15 minutes entry. I typically just do 1 hour and 5 minutes entry. 4 hours will give me a big idea on where today is gonna go, right? You can tell if this is gonna be in the golfing candles or shooting stars. The reason why candle theory exists is, I mean, besides it's easy for them to be memorized for traders, when you give a title or a naming convention for a certain patterns, they are essentially form because lower time frame how they're formed, right? So if you take a look at this, as we mentioned before, when you have this type of pattern, right? How does that look like in actual candle patterns, right? This will be this is be one single candle over here. There is a candle join this. There is a candle sweep. I don't show wick. Let's say there is a wick here, but I don't have a wick. Candle shift, and then there is a market structure shift, right? And then your next candle will open up here for continuation. Why does it form like that? This is bullish engulfing candle. When this body and this body swept both sides of the liquidity of this, it just means that it grabbed this side of liquidity and there's a market structure shift going upwards, right? So this technically will be a red candle. So you have red candle, and then you have bullish candle, you have bearish, bullish, and bullish, right? Typically in this, we call this a bullish engulfing candle. Why is it called bullish candle? Because behind the lower time frame, this is what it looks like. Range, 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 sweeps to one side, market structure shift, pull back, and then continuation, rebalance and continuation. And then what we want to look for is some sort of PD array. We don't want to ever predict where the market is going to go. We want to react. So based on this, to give us high accuracy, where our stop loss is going to be, right? So we have stop loss over here, and then our target entry will be somewhere for the next PD arrays that we target, or just target based on our multiples. All right. So hopefully this is helpful. You can give it a try, backtest on your own chart. Doesn't matter if you're trading gold or whatever current currency pairs that you're trading for. It works the same. All right. If you have any videos you want to see, leave it in the comment section, and subscribe and leave a like, and I'll do more of these type of videos to show some support. That'll be very, very much appreciated. Stay safe and happy trading.